Good morning, guys. Good morning, everybody. How's everybody doing? Let me just make sure that I am good to go here. Let me put myself on a different computer so I can see ourselves streaming. Everybody give me a hi. Let me know if you guys are seeing me. Let me know if you guys are seeing my screen. You should be able to see everything. And give me a hi in chat, please. Let me know all is good. Hey, Ryan, Andy, how are you guys? How are you? Okay, all right. We're gonna start in just a few minutes. Obviously a little bit early, but a lot of cool stuff I want to share with you. Today is really going to be a quiet. I think we're going to do a little bit of a quiet price action. Let me see if I can just see myself a little bit better here. A little bit of quiet price action before the ISM services, because that's a huge event at 10 o'clock. We'll see what we can take, in between then. And then hopefully we'll get some price action afterwards to trade that. After that, I think it's pretty much done. Everybody, I think, is going to just get out of town by European close. You're not going to see too much price action because I think everybody wants to get out for July 4th holiday. Very, very weird week this week in U.S. trading because of this, because July 4th sort of falls middle of the week. So, and more importantly, it's not like, Friday is a non-event because it's a non-farm payrolls, very, very big economic event. I'm typically what happens on July 4th is everybody just takes off after July 4th, right? If there was no major event, nobody would be on Friday. Friday would be a dead day. We'd all just be twiddling our thumbs. You know what, guys? While we're trading, while we're talking, I'm going to take a small trade here. I'm late. Okay, never mind. All right, I can only talk or trade it. I can't do both at the same time. Anyways, point being is, it's a quiet week, and I'm sorry, it's a very, very weird week because of this quietude of the July 4th, and then a lot of event on July 5th. Which is unusual. Typically, as I said, let's say July 4th falls like on a Wednesday, everybody just takes Thursday, Friday off as a weekend. But now we can't. So we're going to have to see how all the price action goes. We're going to be relatively careful in terms of our trading. Since I'm not going to trade right now for a little bit, I really want to talk a lot. This is actually a really good time. And I know everybody's just coming in and you're all going to make me want to repeat this later. But this is for the benefit of those of you guys who came here early, and then everybody who comes in later to the stream I'm just gonna have to repeat all of this later. So, two things that I wanted to really share with you that are really important as far as trading. We talked about this in my past the prop. Good morning, guys. By the way, let me just make sure that you guys have the discount for Apex. Make sure you hit that discount. Two things we talked about in past the prop yesterday that were very interesting. Let me see if I can get all this stuff down here. Yeah, okay, it's working. Okay, that are really valuable. Both either if you're prop trading, as many of you guys are who are listening to me, and those of you who are trading for your own account. So, when it comes to prop trading, Apex is just giving you ridiculously cheap discounts. I think it's like $30-40 per account, $50,000 account. So effectively, you can buy 5 accounts, which is what I recommend. I recommend you buy 5 accounts at once, and you practice something that I think is really interesting and very valuable that a lot of guys in our room, ladies in our room are doing, which is what I call account hopping. And account hopping basically entails the following thing. You trade your strategy for like 3 trades in one account. If you win them all, great. You hop off, you hop on to the next one. If you lose them all, great. You hop on, you hop off to the next one. So why is that such a powerful approach? The reason why it's such a powerful approach is not it's really a psychological trick. Basically what happens is if you're doing great, if you're in the zone with the market, you're hitting those trades, right? The account you're doing well in is going to build up, right? And then it's not going to come back down. Because remember, inevitably, if you make 5 trades, the 5th and 3 of them are winning, the 4th and the 5th are going to be losing. You're going to give back. We always give back. It's a nature of the beast, right? So this is a way not to give back in the account where you've built up equity, right? Now, on the flip side, let's say you go to an account and you kind of hit, 3 negative trades, and you're like, oh, I just want to get all this money back. I'm going to scale up. I'm going to load up on the next trade. And what happens inevitably is you revenge trade and you lose the whole account, right? So when you hop off 3 negative trades, you're basically leaving that account slightly injured, but no, bloody, but not bad. In other words, not dead. And therefore you can come back to it on the next cycle, maybe do well on it, and preserve that account. It is a great trick to both enhance the P&L of the account that's winning and to preserve the equity of the account that's losing. So let me know if you understand what I'm saying here. And this whole idea of account hopping, I'm going to make a video on this to explain it in more detail and show you some of the tricks of the trade. But I absolutely love this idea. This is a great trick. So the other thing that is very cool. I'm just going to put up ES over here. I might as well just watch everything while we're going. The other thing that I wanted to share with you, and this is actually worthwhile. Let me share my I'm going to log into my TradeAway account, which I'm going to share this account that we're trading right now. Come on, baby. Okay, so I'm just going to share with you the reporting. Okay, so today I did nothing. Today is very, very quiet day, but let's just do this week on the account, right? So this is just my P&L this week, right? And it's as I said, I'm really trying hard to do a 75-25 where I'm at 70-30, which is obviously still very profitable, but where it's going to be peak profitable is if I can do 75-25. And we'll talk about all the attempts that I have done with that. But what I want you to see is look at the P&L. This is with fees, so this is like clean. This is without fees, which is the pretty version of how you're doing, and this is the real version of how you're doing, where you're paying commissions, right? And you see the most important thing that I kind of wanted to show you was the very, very low drawdown on the whole history. So I'm never down more. I think I was down like what, $40-50, which is ridiculously cheap. Now, here's what I wanted to tell you to start with as far as prop trading. Remember, I have a $2,500 budget. I can go down by $2,500 before I get blown out, right? So here's what's really, really impressive about this. And I'm going to tell you the one thing I did to make sure that this happened. I'm going to go all the way. Let's go back all the way. I don't know. Let's do custom range just to show, because I think I'm going to go like from the 9th of July to now, right? Okay, so this is the full account, right? And let's take a look at this. Look, this is with fees, so no BS. So up and down drawdown, right? You see the negative drawdown was 259, right? And let's see what the peak drawdown here was. Was about $1.2 to about $600. $600. Like if you can look at this, I don't know if you guys can see it very well on the screen because it's a small thing, but trust me on this, it's about $1,200 to $600 drawdown. So if you look at this sort of really accurately, warts and all on my P&L. I have a $2,500 budget, and the maximum I drew down was $600. So here's the question: how did I manage to lose so little money continuously? How did I manage not to to lose a very, very controlled amount of money on such a long period of time of trading? Right. Let's go back to trading. Anybody want to guess? Anybody want to give me some thoughts and comments before I tell you my secret of what I did? What was the secret that I did that kept my drawdown so little? It's very mundane, I promise you. It's not anything extraordinary. It's incredibly mundane reason for how I was able to keep this. Anybody have any clues? Come on, I want to see some guesses in the room. Let's go. Trend, double up after a loss. So. Okay, who is this? Mark says double up after a loss, right? Proper risk management, low R&R. Okay, so all those questions, all those answers, self-control, blah, blah, blah. No, so all of those answers are really close. So the closest one who came in the absolute wrong way, like in other words, the exact opposite of what I did, but it was a great answer. Mark Warnicki says double up after a loss. So typically I like to double up after a loss. I like to just, I like to roll my losses into profits right away, right? I didn't do that. I stuck to what we call trade one only. Trade one only means whatever is your starting unit. And in my case, my starting unit is always like, one. So I'm basically trading one ES, one Dow, not one NASDAQ, half a gold, or half a NASDAQ. Sometimes, this is on the big ones, because basically what I'm trading is $50 profit, $100 risk, $50 profit, $100 risk, right? That's what I'm trading always as a trade. And what I decided to do, I don't even think I even consciously decided to do this. I just sort of started doing this. Is I typically I would, if I lose, I would then double up. So then I would risk 100, I would risk 200 to make 100 to wash away the losses, right? And I stopped doing that. And I started to just basically work my way back. Like, in other words, if I'm down 100, maybe it takes me 2 or 3 trades. I trade micros, I trade small, I trade smaller size. It just makes me maybe it takes me 2 or 3 hours to get back to break even. But digging myself back out at one unit only max, one risk only max, was the difference in keeping this drawdown under absolute control. I stopped doubling up. Much as I love to do that, I stopped doing that one single thing. It takes longer to trade. You have to kind of learn to spend a day making back losses that maybe happen in the morning, whatever. But it has been a so much more robust type of trading. Now, why this is so valuable is because it's not just valuable for prop trading. It's valuable for any trading that you kind of do, right? It's valuable absolutely for all sorts of trading, for your own accounts, if you wanted to trade that way. I'm going to put up my my Pass the Prop, where we talk about all of these strategies and talk about all these tricks of the trade on the every single week. But this was the one thing that was just super, super fascinating that I thought you guys would really, really like, right? That really, really made a huge difference. So I'm going to leave you with those thoughts. I'm happy to repeat those. We'll talk about those, of course, in non-farm payrolls as well, because I think those are universal thoughts that can help you whether you trade your own, whether you trade with ACAP. By the way, hang tight a sec. Let me get you. I'm going to put together. If you want to get all of the stuff that I'm doing for absolutely free, right? ACAP just gave me. Let me give you this link. I'm sorry. I'm going to copy this link. I want to copy link. Okay. Let me put that in here. Just one second. Those of you who are not U.S. customers or U.S. citizens can absolutely get everything I'm doing right now for free. Just go to that link, open an account, or top off your deposit with ACAP, and everything I'm doing you can get for free. So let me know if you guys hit that. Anyways, now let's talk a little bit about tactics. We got about 9:28, 2 minutes before the open. We're gonna wait about 5-10 minutes before the open. Then we also, of course, got ISM. But here's what I want to share with you that I think is super interesting. I call this, buy the strong, sell the weak. You basically want to trade to the absolute strength. So very, very simple idea. We're looking here on the right-hand side: Dow, S&P, NASDAQ, gold, right? Let's leave gold aside for the time being, because let's just look at indices for the time being. The idea is this: if we are, like right now, 10 basis points, which is 0.101%, or higher or bigger in one direction, that's positive trend. If we're like NASDAQ, let's say to the downside, that's negative trend. So let's contrast and compare. So we have the Dow to the upside. Dow is positive trend. NASDAQ is negative trend, right? So here's what's so cool about it. And remember, NASDAQ was actually down 30 basis points before. So if the big and the current position of the market tells you that you're negative trend, you only take negative arrows. This arrow, this arrow, this arrow, this arrow, this arrow, this arrow. So you ignore the positive arrows. Right? And you see how much better, how much more accurate the negative arrows are in a negative trend. This is like, basically from 6 o'clock onward, if I was actually awake today, because if I wasn't feeling like crap, it was literally 1, 2, 3, 4, 5, 6, 7. Ignore the buys, 8, 9, because this is all still red. 10 winning trades in NASDAQ, or like 9 winning trades in NASDAQ. Conversely, Dow just turns positive right now. That's why I really want to take this buy trade. If the Dow stays positive, you can just keep buying the buy arrows, ignore the sell arrows, right? This is a really interesting way to use my indicator, the triple R indicator, which we talked about yesterday, as even a greater, better filter for more accurate trading, scalping trades. Now, we still got a couple of minutes. What I'm going to do is I'm going to show you exactly how each one of these arrows forms, so that you understand exactly, exactly the sequence of trades. This thing is running away. It's like, my own thought pattern is totally being. Okay, one of the interesting things is the S&P is turning positive now. That's also interesting. Okay, so that's cool. That's cool. S&P is turning positive too. So let me show you how this works in structure, right? Let me. Okay, so the way the arrows are tagged, and I'm going to do this with a. I'm going to do this on the sell side first. So it's 1. So you can really see it. So it's a 3-step structure to how to create an arrow. Step 1 is you have a sell label, right? Like a trend label. First R stands for trend, right? Step 2 is a retrace label over here. This green candle is a retrace. You pop above the moving average, right? And then step 3 is actual momentum to the downside, resumption of trend. You resume the trend to the downside, right? That's how you trade these setups. That's how the arrow shows up after you have 1, 2, 3, 1, 2, 3 on the buy side as well. Now it's not looking at, as I said to you, I gave you the current state of play filter on top of this, but this is just simply looking at, I have a buy, a retrace, and momentum move back up, trend, a retrace, resumption, arrow, trend, retrace, resumption, arrow. You see how that works? I just want to make sure everybody understands that. Give me a yes. Give me a yes, please, in the room. Like a couple of yeses. Let me know if you guys are understanding the sequence, because this is the money sequence. Now you take this money sequence and you put it together with the general overall trend, right? Which means that, like, right now, everything is turning positive. So Dow is plus 10. Anything above plus 10, I consider to be a positive trend. NASDAQ is kind of turning positive. S&P is turning positive. If these guys hang about 10 basis points or higher, we'll only look for up arrows to trade. The Dow is very clear, only an up arrow to trade. I should be trading this, guys. I shouldn't be talking, but as I said, I can't chew. We're gonna do. I'm chasing the trade here. Let's see. Let's give it a shot. I'm just giving this a shot here. On the small Dow, chasing it very, very badly. Again, the trade was here. The profit was here. I'm just kind of trying to show you the trade, but it's, I'm late to my entry. I'm probably going to eat this move. Yeah, I think I did eat this move. No trades here. So let's focus on this properly. Let's see if we can get a good trade sequence going on over here. So this is Dow. It's putting up its positive trend. It's putting up a sell label, retrace label, and then we're going to do a buy label. If it happens, if we get a buy label through it, then we're going to get a nice, good, clean trade. So we'll give it a second on the Dow. I'm looking, NASDAQ and everything else is kind of turning positive. Let me just look at the NAS. So in this particular case, NASDAQ is kind of turning positive. I'd need to see a red candle, retrace candle, and then a resumption candle. And then I'd be really ready to go on that trade. Gold having a good day today. Where's gold? Okay, so here's a good example. Gold is up 118. It's showing me negative trades. I'm going to ignore these. Okay, I only want to take positive trades, right? Because see how the negative trades are just not really giving you a lot of P&L, right? So when you're trading gold, if you go, let me go to full screen here. It's much more productive. Look at all the positive arrows except for this last one are all we're all made you money. But if you're trading negative arrows, you're just basically selling bottoms, and that's because gold is so strongly up. You kind of you ignore one side that's the weak side. Okay, watching the Dow here. Let's watch the Dow. Maybe we have a trade in the Dow. Dow needs to get green over here for me to make this a viable trade. So this would be trend, retrace, and it's got to close green above this in order for us to be a viable trade. No setup so far. The markets are very sloppy. Obviously not a lot of churn before the ISM. The real trend is probably going to come in after ISM. I'm warning you ahead of time, guys. I have a cold, so I'm probably going to sneeze. So just my apologies before we even start. Okay, no trade here yet. How do you get this indicated, David? You join my either my pass the prop, which is right here. Here's this the symbol. Or if you want to just try us for a month, you can try us over here for a month, and you can just try all this stuff for a month. There's a discount. Like shit, I missed it. Okay, I'm trying. I'm picked up this green. Go. Thank you. All right. Fuck. I'm sorry, guys. I'm sorry. I'm glad I made this trade. As I say, with my trading, you snooze, you lose. You got to focus on the chart, or you got to focus on comments. So my apologies. I set you guys up. You got the trade. I told you what to do. That worked really beautifully. That was the classic, nice, clean trade. My job here is to show you the setups. And obviously, we trade the setups all day long with the indicator. But hopefully you guys got it. Anybody take that trade? I'm glad I caught it just in time, because the thing about these trades is you do have to focus on the chart. They're very, very lucrative, very profitable, but you snooze, you lose. You don't want to be coming in over here. The trade is from here to there, not from here to there. That's when I make the mistakes, it's because I'm late on entry, and the only time I'm late on entry is because I'm flapping my gums talking to you guys instead of focusing on the charts and sending you messages and all that stuff. So sorry, I'm not blaming you guys. I'm just telling you that that's just the nature of the beast. So when you trade with me, it's going to be sometimes a little bit hairy. Okay, Dow the only one up 11 basis points, nothing else. Like right now, I don't. But the whole point is, unless it's up 10 basis points or down 10 basis points, which is 0.10 of 1%, there's no trend. It's an arbitrary number, but that's how I'm basically gauging the market. The market right now is for all intents and purposes is flat as fuck, right? So nothing going on. You can see the market's just going back and forth, back and forth. We're just trying to operate within the zone of trend if it appears to us, right? For now, clearly it's not. There's just the zone of churn right now for all of us. The take profits. Okay, the take profits on the Dow. It's a 10-point target, 20-point stop, always with a 1-2. On the S&P, it's a 1-point target, 2-point stop. On NASDAQ, it's a 5-point target, 10-point stop. On gold, it's $1 target, 2-point stop. Okay, it's always a 1-2. On the things you can modify them, any way you like. But these are the scalp conditions that we use all the time. That create the structure. Now I'm looking at the S&P, right? Like let's look at full length S&P. So S&P is, it's tempting. but if I want to stay true to my idea, okay, I don't want to be, the S&P clearly turned from negative to positive. This is not a bad, it's not a bad idea to take this trade if I get a positive candle, positive arrow. But this is essentially when you impose that artificial limit of plus 10 basis points, up 10 basis points, you will just naturally have to sacrifice the first 2-3 profit moves, right? Because the very essence of trend phase transition is you're going to go from a sell trend to a buy trend. And if you're going to be patient enough for that plus 10, all of these profits, which are occurring from between 0 to 10 basis points, you're just going to have to give up, right? And I think that's worthwhile to sacrifice that to get a little bit more confidence that there is buying, that there's persistent buying, because what we're interested in is in continuity. We're trading continuity. We're trading the ability of trend, to extend for 20 basis points, 30 basis points, 40 basis points, right? 145 will get you a month entry. Won't get you my coaching though. If you want the coaching, you'd want to do the Pass the Prop Academy, which is a great discount because that's like 3 months for effectively like $110 a month. So it's a really good discount if you want to try that. You trade without a stop loss. Okay, have fun. Let me know how that goes. I'm sure you will do very, very well for a long time, and then you lose all your money, which is how it all works out. But it's a valid strategy until you lose all your money. One thing, by the way, those of you guys who are trading Apex with me, it's really ambiguous, I think, in terms of their attitude about stop losses. They don't require you to put a stop loss on there, but I think if they see you just basically holding trades, and I think they talked about this, if they see you just, let's say you have no stop loss and you're just basically praying that the equity margin, keeps you in the trade, and then eventually you get rescued out. If they see evidence of that continuously, they're not going to fund you, which they shouldn't, because then you're just gambling with their money. So I think the rule is sort of they don't mind you if one or two times you don't put a stop loss in there. You notice I put a stop loss on every single trade I do. I've done that for 10 years. I spent first 10 years trying to think that I was smart without a stop loss, and then I learned the hard way. And just like now, I'm basically learning that one unit back is probably the best way to trade on a continuous basis. Same thing. One of the cool things I want to talk about now, while nothing is going on until we're waiting for the ISM. We hit our first trade of the day, and now we're just kind of twiddling our thumbs. Is the really, really great aspect of prop trading is what many of you may think is just, I get to be funded. And there's lots of guys in my room. We've had more than $2-3 million worth of funding over the last month, I think between May and June, in my room, from guys who are trading, who are doing, by the way, a much better job than I am, because they're focusing on trading and I'm focusing on yapping all the time. That's the sexy part of prop trading, is that you get to trade other people's money and you get to collect other people's money, and it's really, really attractive. And that, no doubt about it, is the greatest thing about it. But I think that's really not the best benefit of it. I'll tell you what the best benefit of it is prop trading. Prop trading is like flying planes in a simulator, right? They train pilots in a simulator because those are better actually than real flying. If you do it properly, you get these enormous amount of skills. So the great thing about prop trading is that if you get good at doing this on an over and over and over practice basis, you will then be so rock solid on your account, right? Because think about, let me kind of just run you the mental map of what this is all about. So it's a $50,000 account, but effectively it's a $2,500 drawdown against a $3,000 win rate, right? So that is equivalent, the same thing, whether you have a futures or a CFD account, of like saying, I'm going to put $3,000 into my, and I'm just, I'm taking $2,500 down to $3,000. I'm going to take $3,000 into my own futures account or into my own CFD account with ACAP. And I'm going to use the exact same skills I used in prop trading. And I'm going to be able to make $3,000 because that's really what we do all day long. We're basically risking 2,500 to make 3,000 over and over and over again. And we're able to replicate that, right? So once you develop these skills in prop, you're able to do this. Oh, look at this. Look at this. Popping up over here, still very, very, very flat, right? So I can't really commit myself to making this trade on the ES if I'm going to stay to this 10 basis points. But if you want to, if you want to putz around, let's just take the small one. We'll just take the small one, although it's not, not really trading. Okay, I'll take here. It works. It works. It doesn't work. It doesn't work. But 75. Let's see if this works. I think it might work. I had it. Yeah, it's going to work. It's going to come, baby, come hit me at 75. No, lots of volatility. All right, let me focus on this now. I couldn't quite get it to 75. Let's see if this lifts me at 75. There I'm lifted. Okay, so it was good. It was good for a point. Again, just trying to show you the technique. This was trading the S&P. Up arrow, we're mildly positive, right? So I said I want to see 10 basis points. We're like 2 or 3, but this was already the third or the fourth run in the up move. So I just decided, okay, let's take a small move. But you see how trading to strength with this particular setup, 1, 2, 3 setup, the trend. I'm losing my mind. What's the second R stand for? Retrace. Trend, retrace, resumption. Sequence just works really, really well, especially when you marry it with the positive tone of the market. You just I'm only looking for the positive stuff. Lots of execution required to learn. Absolutely. Well, anything good, you think about this, any kind of a skill that you want to achieve in life, right? I mean, if there was no skill to learn in trading, right, everybody would be a billionaire, right? But think about the people who do. The skills you learn are easy skills. You just need to practice them. And if you practice them on prop, where it costs you nothing, it just costs you, a small fixed amount of money. Those practices are amazing. It's like being able to play tennis for the rest of your life, or being able to play golf. It's an incredible enjoyment with very, very great benefits of being able to make money consistently. That's hard to do unless you have the skills. But once you get the skills, it becomes like everything else, just hitting the ball across over the net. Really nice. And that's what I love about it. I think it's just a much deeper experience. You come into it for the money, and you stay in it for the learning experience, which I think is really, really cool. Yep. Anyways, okay, two trades to the good so far. 947. Really nothing much to do because we're just waiting for the ISM to see how that shakes itself out, and where we go. And really, what we're waiting for is, let's establish some kind of trend movement here. Like we're getting close to a positive trend everywhere, right? Looking at the screen, I'm not focusing on gold, guys, just because again, it's just too much focus on this. But gold is effectively now gold is in a buy zone right now, right? Gold is a positive bid, so all these buy arrows would have been more or less okay. Although I will say that if you took this buy arrow, this probably would not have worked. The 60, 50. Well, no, you had a $2. No, yeah, you would have just gotten clipped on this one. In this case, the buy would have been 66. And your target would be 67. Let's do a small gold. Let's do a small gold. Let's see if this works. I'm still within trade here. Okay, give it a shot. This is gold is pretty mature move. It's a $1.40. It's not like it's 10, 20 basis points. It's already had a really, really big move. But I'm still trying to trade within the trend condition here. And the idea here is that 66.9 is my target. We'll see if that works. But again, it's the same principle as trading. I want to show you the principle so you guys can then learn the principle and put it to use yourself. As I said, this particular indicator totally free to everybody who trades with us at BK, but you won't find it anywhere on the on TradingView because it's private and it's hidden. So where am I here? 66. There we go. We're almost there. I'm just gonna take this trade over here on gold. So it's like I took a $0.50 on gold because I'm just, I don't want to focus on gold, but the principle played out. Strong bid on the day. Buy arrows, buy trade. Let's just stay to the strong, stay to the weak, all that kind of stuff, right? Otherwise, nothing much is going on. The other cool thing, by the way, is when you're looking at the dashboard and it's showing you zero frigging movement, right? It's keeping you from just kind of making dumbass trades, right? Just forcing trades because you got nothing else to do. Like, we took the Dow trade, which was at that time plus 10 basis points, was a legitimate trade. We took the S&P trade, which was sort of cleared the initial buy signal and was pretty good. We took the gold trade because it was a continuous buy trade. It was very, very good. And now, we're just kind of watching. And NAS, by the way, is, of course, the most volatile. So NAS, you really want to see a 10 basis point clearance before you kind of get into it. But, you can clearly see trend phase transition from the sell trend to the buy trend right now. Now, if we can hold it, above 10 basis points, if let's say we get positive dollars, then we're good. Yeah, I took a small. So David, I took a small trade because, again, I'm showing you the setup, right? It could have been $1,000 or $10. It's completely immaterial. The reason I took a 10 is because I am trading my own account right now. I don't want to blow it for $200 negative to show you the setup, right? To show you the setup, just to make you understand why I'm taking small trades. And neither should you. Just because, you think the setup is there. If you don't have the full confidence or the full effort in this setup, take the small one. You can always take the next one. I'm going to do 20, 30 trades today. As you can see, my account is just, straight arrow up. You'll probably get funded, at the pace that I'm going, probably by next week when I see you guys, right? That's how you do it, my friend. If you're focused on making big money on one single trade, you're in the absolutely wrong business. You're not in the trading business. You're in the lottery business. And it's great to play the lottery. And there's lots of guys on YouTube who are going to do one trade for fake $1,000 because that trade is literally it's one trade for 1 point across 20 different accounts. So it's not really $1,000. They made $10 on 20 accounts, which is fine. That's that's a legitimate way of trading, but it's a bullshit trade, right? I'm going to make 100 trades, each one of them $50 or more, and I'll do them for the rest of my life. And I'd rather have that skill than just to showcase one trade, one lucky trade that I've multiplied by a factor of 20. So understand what I'm trying to do with you guys. I am trading real, real money, real targets, real stuff. Everybody who gets funded in my room for millions of dollars at this point already is trading real structures, not bullshit structures. That's why so much of stuff on YouTube you guys see is complete bullshit. It's all fake theater versus actual trading skills. That's what I'm trying to teach you guys. Okay, is that clear? Yeah. Process, exactly. Process, exactly. Fancy word. The word is process, right? And process is far more important than money for now. I mean, not that I don't want to make big money. I will, but there's no need. It's 7 minutes to ISM. No need to fuck around, right? If I'm going to take a scalp trade, I'm just going to take a small one, just to work the process. By the way, look at how nice Nasdaq is. So now comes the moment of truth. We got about 7 minutes. We're going to wait to see where ISM is. Let's actually take a look at what everybody is looking for on ISM. Let's go. Financial juice. You guys. I have no affiliation with this website. We just simply lose it. But let me just post a link here. They're a good website. I pay for this. I think they have like a free version. And again, I have no affiliation. This isn't a sponsor of ours or anything. But I really like them because they're kind of like a poor man's Bloomberg in a sense that they give you all the data the instant it's released. They run a nice little feed here and some other kind of news services. So whenever I want to know where everything is going on, I usually like to go over here and see see what's happening. So as far as numbers go, so services. So this is interesting. The PMI services, which runs 15 minutes ahead of ISM, slightly better. Yesterday, I was going to tell you. So JOLTS was a big surprise. So when we talk about macro right now, everybody is kind of like convinced that we're slowing down, including me. In a sense that it feels like anecdotal data from retail, from like Starbucks, Kohl's, everybody, the consumer seems to be tapped out, that the growth in income, people are not getting, their salaries are not going up anymore. So they have a limited amount of resources for essentially the relatively high prices still. Prices haven't started rising more, but the absolute value of price levels has increased. So everything's expensive. We all know, going to the restaurant used to be $20 a meal. Now it's $40 a meal. It adds up. It adds up. You feel it. Even if you're making money, you feel it. So there is, I think, a natural belief here that the economy is kind of hitting a little bit of a brick wall. That being said, yesterday's JOLTS was a big shock in the sense that it showed that there was like more demand for jobs. Whether that's just simply an after effect of interest rates being lower, construction still being a really, really big part of demand, and that labor is really keeping the labor market strong possible. But we'll see now. I mean, there've been two things that the economy has been suffering from, which is services inflation. Like service businesses have really, really increased their prices a lot. We'll see how the services prices paid numbers come in, and then obviously demand. Where are we? And the employment numbers here would be interesting to see. So, yeah, I mean, Powell basically said, Powell was very bullish yesterday. He said disinflation is starting to kick in, blah, 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 so on and so forth, which is, I think it's true to some extent. But the source, we all know that goods inflation is down, right? Like, everything on the goods side is down. It's going to the restaurant, but, staying at a hotel, buying an airline ticket, like those things are steep, right? I mean, do you guys disagree? Have you gone to your your restaurants, bought any kind of a service? They ain't going down. They're not coming in as they were, and that's the interesting part, because that is the much more sticky part of inflation that I think they're focused on. So we're going to be watching that number. 3 minutes to go for that on the numbers. Let's take a look at what's going on. Markets are still pretty good. S&P now is firming to 8 basis points. Nasdaq is 9 basis. So they're all basically firming up to a to a trend-like condition. Now let's see what the numbers will do. And again, remember, I think today, like, even unless the number is shocking and we have some really serious price impact on this number, I think it's going to be a half-hour play, and then by 12 noon by European markets, everybody's going to be dead. Everybody wants to go. It's July 4th. Guys on the floor want to get out. Guys on the bank side want to get out, go to their beach houses. Everybody hates the fact that we all have to come back on Friday and trade, but we are going to come back on Friday and trade. It'll be that'll be interesting to see too. But let's see what the macro data says right now. We've got 1:23 to go on all of this. Let's see what's happening. In Australia, it's very expensive. Yeah, I mean, I remember Australia when, like 10 years ago, when it was $25 for breakfast. So I can imagine how expensive it is now. All right, 48, 49 seconds. Let's see what's going on. Market looking at 52.6 on probably could come in at 53 if you look at the fact that the PMI came in a little bit hotter. But the big thing I think I want to be looking at is the employment and the prices paid. Let's see what those numbers are and whether that's going to have any impact on the market. 8 seconds left. Okay. New orders dropped like a mofo. Employment weak. Factory down. Prices paid down, but not much. Wow. Holy shit. Employment really dropped hard, and services is negative. Let's see if this is what's going on over here. Wow. So the market is actually looking at this as, that's interesting. Market is looking at this as net negative. Now, this is news that basically says the Fed has got to cut, right? Which presumably should be positive. That's, by the way, it's the one thing that is definitely positive is gold. Like you see gold just popping the fuck up, right? Gold is definitely positive. So for us, like if we're sort of macro trading this, I'm waiting for like the next buy arrow in gold, because gold I think is clearly a huge benefit. This is screaming cut rates now, cut rates July, because yeah, really bearish. And look at all my algos are all my algos are popping up on the FX stuff. It's interesting. Okay. However, on the equity side, it's interesting. Equity side, they're kind of just holding bid right now. It's generally should be like the lower interest rate aspect of it should be mildly positive for equities, right? Because equities, especially NASDAQ is the one that benefits the most from so NASDAQ, nobody's really reacting much here on the direction. The one thing that we do know is that gold is really reacting well. And as a matter of fact, let me put gold over here on this side so we can just watch it. We need gold. Gold may take more than a couple of minutes for it to totally reconfigure ourselves. But we're looking for an up arrow on gold, which is going to take a while because we have a sell label. We've got to create a buy label in gold on the upside, then a retrace, then a move. It's going to take a while for gold to really give me a clean, clear signal using my indicator. On the Dow, where's the Dow? Dow is in positive mode too. S&P is fine. S&P is fine. Oh, S&P is actually giving us a signal. Okay, let's wait. 29 seconds. Oh no, I'm sorry. I missed the S&P signal. I'm sorry. I missed the S&P signal. The S&P signal was right here. That was the trade. Now we're gonna have to just wait. Let's wait on the S&P because this was right after the news. You see the positive arrow on the S&P. It wasn't quite 10 basis points. So I held off on it. And it's actually, we haven't really established trend in any of this stuff. It's still very, very choppy. Dow now turns negative, right? Interesting. Dow now turns negative. And I wonder, and this is kind of my suspicion. By the way, I'm going to take a small one. Just late on this thing. Again, this is just me specking. I love these trades. I'm going to take a small one on this. Let's see if it works. I'm very, very late on this entry, but I love the switch of trend trades. This is not sort of like my standard trade. I should have been in here. I should have been in at 90. It would have been totally done. I'm 20 points behind my trade here, but I'm just taking it for shits and giggles here. But I love the switch of trend trades because they tend to work really, really well in this signal. So in other words, if you're switching from a buy trend, it switches over by giving you like a neon sign, and there's always really decent continuity on the switch of trend trades. And of course, now I'm getting my ass kicked because it's on the retrace mode. I don't know if it's going to have enough momentum to take me all the way down because I'm so super late on this entry. But let's see if here's my DOM. Where am I? We're at 76. I'm going to eat this. I'm going to probably eat this move. But the switch of trend trade in equities, not in gold, but in equities, is a really, really good trade. So if you go into S&P over here, this should be over here. S&P has we have a buy signal on the S&P. Okay, so let's get serious now. I'm going to do the buy. I have 14 seconds. This is a legit signal, right? 11 seconds left on the S&P. This is legit. I'm going to see if I can make this viable. Okay. Long the S&P, 75 is a target. I guess 70. Where's my stop? Oh, I didn't put a stop. Shit. Okay, I got to put a stop. So 73. You know what? Sorry, I'm just going to I'm sorry, guys. I'm going to flatten out. I forgot to put the stop on this thing, but it went to full target on this. This was like a legit good clean trade. I just didn't want to fuck around with a stop on the up one. But look at this. That was a nice clean buy. 11 points, to the side, like really starting to create trend. Let's take a look at NASDAQ. Does NAS have NAS? Could be our next trend trade to the upside, up arrow over here. If I can get an up arrow on the NAS move here. But S&P kind of flipped around. That was a nice clean trade. It hit 73.75. I sold at 74, but it went all the way to 75.75. It would have been a full point if you took it. I just, I forgot to add the stop to it, so I just simply cleaned it out at small profit. Okay, guys. Now we just have to be patient. So now we're sort of aligning. Now we're 13 basis points to the good in the S&P and NASDAQ. Now we're kind of trend-based conditions. Now it's a lot more interesting for us to kind of trade. And you see, the first half hour, I think I'm like 4 to the good, 1 to the bad. I had like 1 negative stop out. All the other trades, I won. But they were, I was basically just trying to make a lemonade out of lemons. There was no clear conditionality, directionality here in all these trades. And now we're, this time of day, 10 to 11, generally tends to be a pretty decent, trend-based structure if we can get it. This news is not great on the economy. I got to tell you, it is definitely confirming the fact that we're slowing down significantly. So the other big question is, right now the market is still trading on the fumes of lower interest rates, right? So lower interest rates more important than growth in earnings. But eventually, if you get to the point where you say, oh shit, the economy is slowing down, earnings are not going to be there. Once that reality hits the market, it doesn't matter how low the interest rates are. We're going to go into a different dynamic. And I think we're almost, what do I know? I'm always calling, my opinions don't matter. It's only my trades that matter. But if you're looking at it from a macro point of view, I really feel like Kay and I have been talking about this, that we're peaking of trend, of market top at this point, and that markets are absolutely ready for a nice big sell-off. Okay, Dow switches to the buy side. I'm just putzing around here just to see what's going on here. Nothing much going on here. And you see, by the way, we can't get much past 10 basis points. That's a really, really important signal to you. And by the way, gold, look at gold, babies, right? So, gold was just clean money for us. I didn't trade it because we're focusing on equities, but gold, I told you, gold was already, $1.62 to the good for the day. The lower interest rates was really positive. I think we came in at around 60, we came in around 65 to 66. Gold is like 72. I'm just curious to see where gold structures are. We don't have, if gold is just in such a runaway mode, we don't even have a signal yet, right? So we need a retrace move and then resumption move for gold to happen. But gold is certainly liking this data. Of all the instruments, if you're trading this fundamentally, gold was by far the cleanest trade, simply because of the interest rate structure. Now, if come in tomorrow with really weak NFPs, which by the way, ISM services is one of the best predictors of the NFP data. So if that contracted, that could be confirmation, and that confirmation could take gold tomorrow to 2,400. So that would be something for us to talk about on a macro side. But from a from a scalping side, you see nothing is going on, right? We're just trading either side of 10 basis points up and down. It's not, a market that has any strong convictions just yet. And I got to tell you, now, again, I have no idea what things are going to happen tomorrow, but sort of my thought tomorrow is if we have a weak NFP, right, we may have a knee-jerk reaction originally to the upside in the market, and then I'm going to just collapse because I think the market's going to start to understand that earnings are going to be under threat now as jobs and demand, stops going. Have one more upside move here in the S&P. Oh, sorry, I'm looking at the wrong one. Okay. See if this candle holds. This is a very mature trend. It's like a buy 9 label. So kind of a really, really mature trend. And I think I'm gonna, because it is a mature trend, I'm just gonna make it on a small side. The two things about this particular trade that make me very, very cautious. One is that look at the move here. The move is just huge off. In other words, I want to buy near the moving average, although it is coming back down, so it's kind of pretty good for me. Okay, let's get long here. So as I said, two things that make me cautious and why I took a small trade instead of a large one is because I was really, really far away from the moving average, and it was a buy 9 label, but it worked either way. It worked either way. Trading, again, just proving my thesis that when you trade to trend, you generally get really, really good plays. No plays in the Nasdaq. I was just looking at Nas. Nas is also was up 10, 12 basis points. But you see, you take the best morsels out of the market that you can, and you keep going from there. So I think 6 out of 1. Again, my target for my own account is to be 75%, 75% winners, 25% losers, right? 6 to 1, I'm there. They're obviously not all same size, so that's inevitable because they're not all going to be perfect trades. But if you sort of just understand the process, you see where the P&L comes in, you see where the risk-reward ratio comes in. It's all comes in, right? Okay. Any other questions, guys? Let me see. If Trump wins in November, stimulus coming just in terms of regulation. I think the Feds are going to cut in force, are going to cut in the face of that. Interesting question. Adam is asking an interesting sort of a geopolitical question. He's saying if Trump wins, the very fact that he wins means there's going to be tax cuts and deregulation, which is very stimulative to the economy. Why would the Fed want to lower rates in the face of that? So I think you're probably right. However, the Fed is very non-political. Fed looks strictly at econometric models, and the Fed has to deal with today, not November. We don't know if Trump wins. We don't know what happens in November. Shit, we don't even know if we have a country in November the way we're going right now. So I think the Fed just has to focus on the reality today. The reality today is clearly a slowdown. The Fed's job is to maintain demand. So what they will do is they'll do a 25 BIP, and they'll probably, and I think you're right, they'll probably, unless the situation deteriorates really, really rapidly, they will just simply hold until, whoever comes into the office, and then we see how it goes. But it's a good point that at best, the Fed is good for just one cut because of all this uncertainty overhang on the political side. No, I have not done the Ninja Trader yet. Although it's not hard for me to replicate this in Ninja, and I think I will do that actually. It's just been super busy, Ren. It's been a little bit crazy, but yeah, I'll try to put that on my to-do list. I'll get my Ninja guys to write a version of this. And yet another. So here's another. I'm sorry. While I was talking, there was another uptrend over here, but we're like at buy 10. Which at this point, like when I get 10 buy labels, I get a little bit more cautious in terms of the trend extension. Sometimes I've seen these trends go to like buy 15, meaning that there's like 15 consecutive buy labels in a trend before it exhausts itself. But generally, once you get to about 10, you want to be a little bit cautious on taking the trade. So that's why I held off on taking this trade. But as you can see, had we been up, 10, 12 basis points before and we had all these up arrows, it would have been really, really clean to take all those trades. Regardless of how you do it, you can't, the whole thing about trading is you can't let the perfect be the enemy of the good. We didn't take every possible winning trades, but we took some of the winning trades. And some of the winning trades is really what trading is all about, right? It's really what we're all about. As long as I take some of the winning trades and have a net positive P&L and grow my P&L every single day, I'm in business. I'm in business. And then all I try to do is just get better and better and better at it every single day. That's the motto. That's what we trade here. That's what I hope you guys really like as far as trading goes. And, I will be glad to do this with you on Friday, the non-farm payrolls. Yeah, I could have taken the trade. Yeah, I could have, but I held off. Anyways, guys, I got to run. Everybody have a wonderful, wonderful July 4th break if you're US and celebrating. In UK, good luck with your election. My best prayers to you that whatever happens, happens. It's like a choice between a cat turd and a dog turd, I guess. And I'll see everybody on Friday for non-farm payrolls. Okay. Make sure you guys, let me just put up the links again. Make sure you sign up for Apex. And make sure, let me give you my discount link. And oh shit, I'm sorry. Sorry, my bad. My dyslexia. Here's a discount link. And here's my pass the prop link. Okay. So hopefully you guys all got that. Thank you so much for hanging out with me. I'll see everybody on Friday. Everybody enjoy. It's been a pretty good day. I think 6 for 1, right? 6 for 1, not too bad. Really hit a few good trades. And more importantly, I'm teaching you the process that I think is really good. Look at NASDAQ, by the way. NAS, while I was yapping, NAS now is 17 basis points to the good. So positive trend. We got up arrows. So up arrows and NAS are going to be really interesting opportunities for us going forward. So I'll leave you with that. Everybody have a wonderful day. I'm out. Everybody, see you on Friday.